Hello, everybody. It's Friday. And it's Friday Fire. And it's a holiday weekend in the United States. So I'll keep this short so you can all get back to your holiday. I want to thank everybody for coming. And thank you. Hey, Preston's here. And oh, stop it. Stop. What's wrong with this thing? Sorry. The thing was playing in the background. Yeah, clumsy. Anyway, thank you, Sean Donnelly, American Beijinger, K8, everybody for being here. Let's get into this story today. It's called Bitcoin Megatrends. There's stuff happening behind the scenes, which is quite incredible. And you've heard me talk about dominoes and game theory, etc., for quite some time. But now things are really picking up, and the future has never been so bright. So let's get into it. And of course, not financial advice. And thank you, Joshua Smith. Thank you for being my friend. Love the Patreon. Thank you. There it is. Let's move into the story. First of all, fear and greed is 78. We are in extreme greed, ladies and gentlemen. That's when the euphoria kicks in. So watch out there. And we did have a bit of a dip in the Bitcoin price. We hit $112,000 yesterday. Bitcoin price, as we speak, is just shy of 109,000. It's been bouncing around all day, but down nearly 3,000. Again, because of tariff tantrums. Somebody's playing hardball with the EU because he wasn't able to negotiate with them. Anyway, we'll see that that'll probably be a nothing burger in the very near future. Now, everybody's asking, what's driving the Bitcoin price? And even though Bitcoin's fallen $2,700, down from 112,000, it is up a lot. It's up nearly 45% off the bottom about 6 weeks ago. And what's driving it? Well, there's a category, not just ETF inflows, but something called institutional FOMO. And of course, money printer too. But institutional FOMO is really happening. And we'll talk a bit about what that could mean in terms of dollar flows and some interesting findings as well. First of all, speaking of dominoes, Greg Abbott, the governor of Texas, which is the 8th largest economy in the world, are going to establish a strategic Bitcoin reserve. Woohoo. And Texas always wants to be first with a lot of stuff. And this is huge. It's a massive, massive state, massive economy, and they want to be heavy into Bitcoin. But not just that. And we have others as well. I think New Hampshire is in there, and part of Arizona. I can't remember. They said no, and then they said yes to something else. But either way, it's coming. A lot of it, this good stuff is coming. And this is a new era in finance as well. State finance, government finance, sovereign wealth finance, pensions. And a lot of the money that these states actually have is in pension funds. So this is great for them as well. Now, within hours as well, from the Bitcoin historian, Michigan introduces bill to allow $100 billion state pension fund to invest in Bitcoin as well. Again, America seems to be all in on Bitcoin. And at first, it's very gradual, and then it's very sudden, and that's exactly where we are right now. You are witnessing history, ladies and gentlemen, and Bitcoin likes it. Now, we did have those tariff tantrums. Zero Hedge says Trump recommends a 50% tariff on the European Union. Not good. This rattled the markets very early this morning. Futures tanked. Bitcoin tanked. Everything tanks. And then people realize, well, this doesn't really affect things like Bitcoin and Tesla. And then they rebound. So we've been through this drill so many times, it's almost ridiculous at this stage. But anyway, Saylor, Lord Troll, says no tariffs on Bitcoin, which is awesome. And it's so true as well. Again, the price of Bitcoin falls because of this. When, if anything, any type of crisis that exists in the world, it's actually a boon for Bitcoin. It's just so funny the way it falls. I don't know. We'll see. We're getting wise to it, though, now. And I do expect a good recovery over the weekend because crazy stacking is happening. Now, other stuff that's also happening, too. This is the long side of traders, how much they are spending per day to go long Bitcoin. The numbers are pretty bonkers, ladies and gentlemen here. The future funding rates are ticking higher, very high. In fact, they spiked right up. And traders are beginning to bet very, very heavily on the long side. They're buying call options hand over fist. And they're paying $10 million a day in interest cost to the short side to go long. This means that the carry trade will be back. So a lot of the money probably flowing into the ETFs is not just pensions and sovereign wealth funds, but maybe some hedge funds as well. And the hedge funds, a little moment of silence for the hedge funds. They got destroyed being in short positions for things like Tesla and Nvidia over the last 6 weeks. So a moment of silence for the hedge funds. Only kidding. We don't care. Anyway, this is also interesting. This is the flows into the Bitcoin ETF. A couple of things that jump out at me here. One, they had the biggest flow of any ETF on the planet yesterday. That is $877 million in a day. Tilt is, I don't even know who's touching that stuff anymore, is number 2. But the key thing I want you to focus on, which is really the bigger thing, because a month ago on DCA, we said it was time to flip gold into Bitcoin. Bitcoin was completely oversold. Gold was making new all-time highs. It was like a pair trade opportunity that hopefully it appears a lot of people saw. Mary Magdalene, thank you. I love that name, by the way. But if you look here, the gold outflows over the last month, $2.5 billion. And the Bitcoin inflows, $7.56 billion. So I wonder where all that gold ETF money is going. And yes, we know the Chinese central bank is buying gold, but who cares? The Americans know there's a better gold in town called Bitcoin. And I thought that was kind of fascinating. So yes, the trade did happen, and it'll probably continue because Bitcoin is just going to continue devouring the world. Now, speaking of devouring the world, I saw this chart here from Bitwise, and I found it quite fascinating. And I always look at numbers and remember numbers, and I love this approach because they've got a breakdown of how much they believe could flow into Bitcoin by the end of 2026. So they see nation states, 162 billion, wealth management platforms, 120 billion, public companies, 118 billion. That'd be the MicroStrategies of the world, etc. Then you have the states, $20 billion. Texas, Arizona, New Hampshire. They only have 3, but I guarantee you another 20 will come. So that 20 billion could be a lot higher. Then you got your sovereign wealth funds, Abu Dhabi, Norway, etc., 8 billion. But if you add them all together, that's 426.9 billion just from these players that are listed here. And I'm like, So, as usual, I whip out my handy dandy little multiplier and calculate what would the price of Bitcoin be if this institutional adoption happened, and if 426.9 billion came in. And again, what I like about this is these funds, although it's nearly $500 billion, it's actually feasible considering what we've seen over the last year or so. That's what makes it really interesting. Now, whipping it into the model, multiplier 21, which is very conservative, if $426.9 billion comes in, that would add 597K to the current Bitcoin price and take us to $693,660. That is insane. That's a 530% ROI from today's price. But I know it sounds insane. And I know it sounds completely crazy. But if nearly 4 million Bitcoin would be absorbed, if this type of money did flow, which is theoretically feasible, they'll have a hard time buying nearly 400,000 Bitcoin. Nearly 4 million Bitcoin. A very, very difficult time. But there's more. There's an interesting pattern that I noticed. Shout out to James Check from Check on Chain. This is his chart that I saw a week or so ago. And I was saying, that 442.6, 426, 42.6, 426, that seemed really like a familiar number. Well, guess what? Bitwise. Their number is 426 billion. All right. James Check has monthly flow of 42.6 billion. Okay. So the Bitwise numbers, as I said, it's quite possible. But if you take James Check, 42.6 billion flow, and you multiply it by 10, you get $426 billion. So again, they're saying to the end of 2026, call it 18, 19 months. It's very, very possible. That's nearly double what has happened lately. So yeah, things could really go off. And again, if the US decides to do a strategic Bitcoin reserve, we're all sitting very pretty. Anyway, that's a fun discovery. I don't know if they decided to look at James check in monthly inflow, multiply it by 10 to be conservative, although we got 19, 20 months left, which you could actually multiply it by 20. But there we are. I thought that was fun. Anyway, I also believe there's no such thing as coincidence, but we shall see. It'll be interesting too. And they do have a very good breakdown as well, I do want to say. All these things are completely achievable. And this is by no means the complete list of institutions that could come to this space. We're not even talking about other nation states that could follow SBRs. So, and again, the numbers add up and they are painting a very rosy picture for us in the future. Now, these are the monster inflows, especially BlackRock. BlackRock pulled in nearly $1 billion yesterday, 877.2. Day before, 530.6. The day before that, 2.6. I mean, huge numbers going into IBIT. They are running away with this thing. Nobody else even comes remotely close to the BlackRock IBIT flows, but they are the biggest money runner in the world, and they do have broad connections. So when a sovereign wealth fund somewhere on the planet wants to buy Bitcoin, they're probably using this vehicle to do it for now, until they find other ways. Now, what's also happening too is open interest on Bitcoin options hit a record high, 42.5 billion. 42.5 billion. Remember, the market cap of Bitcoin was under $1 trillion not too long ago. And now the open interest alone is nearly $50 billion on one platform called Deribit. And there are tons of strikes. I mentioned this on Okta on Tuesday. $300,000 strikes, 6,000 contracts betting for that price, which is exactly 34 days from now. Insane. This is extremely bullish conviction. We'll see if they win or not. But I imagine $300,000 in 34 days. Whoa, that'd be great. Anyway, be careful out there. This is a new story that came out too. Unfortunately, it's a couple of angles to the story that I think people need to know. And I wasn't even aware, but this is a 30-year-old American tourist who claims he was drugged with a drug called Devil's Breath, which I never heard of. It's scopolamine or something like that. And he was picked up by a fake Uber driver that drugged him and then stole $123,000 in Bitcoin. I think maybe some XRP as well from his wallets. Again, his life savings gone. And of course, the funds are gone too. I don't know if they spoke to the FBI, etc. But this is sad. So be careful if you are getting into one of these Uber vehicles. Make sure it's a legitimate driver. And this is also a boon for driverless cars. You know, if you're shipping your kid to a sports practice or your grandmother to whatever they need to go, you know, everybody will want a driverless car from a trusted source, not a fake Uber driver. So be careful out there, everybody, and don't talk about your Bitcoin or crypto or anything else. Very, very dangerous to do so. Now, this is hilarious too. We talked briefly yesterday about the Sui attack, and Cetus, the exchange on Sui, offered the hacker $6 million if they give them 55 million in ETH back. I think it was kind of funny, but there's a whole bunch of things here. It's like, are they going to do that? I don't think so. I don't think so at all. It just seems like a really weak offer. And again, it would probably come with some strings, which could be kind of dangerous for the hackers too. But the craziest thing, though, is for crypto. This goes back to Dino, you know, decentralized in name only. This is from Jesus. He posted this: decentralization is a lie. The mask is off. Because Cetus has worked together with different platforms to be able to lock funds, work with validators, identify addresses, etc., to prevent things from happening. And I understand it's a double-edged sword. You know, What about the centralized control? Is it contradicting the blockchain's decentralized principles? Or is it downplaying it as a bug? What's the transparency here? Does this erode trust? Again, security is critical. You don't want the hackers getting away with stuff. But then so is upholding decentralization. So where do we draw the line? I don't know. But it's a interesting case. And this has happened as well, places like Ethereum in the past too. But watch this space carefully. Anyhow, stock market fear and greed, a little bit of stock market news down to 64. For the last 10 days, fear and greed for stock market and crypto have been in sync, like 69, 70, 79, 60 all the time. And now they've broken out. So stocks have fallen, especially on the news of tariffs, because they're worried about earnings. And crypto's gone to greed. So it's like we're seeing a big breakdown in correlation between crypto, which used to be a risk on asset, is now looking very risk off, considering the turmoil. Anyway, WedBush, shout out to Dan Ives. He comes out and talks about the golden age of autonomy is here. That term golden age is thrown around a lot, but Dan Ives does says it is here, and he brought his Tesla target up to $500. Price of Tesla right now as we speak is $341. So quite a ways to go. And remember, this thing was down at 200 a few weeks ago. So 220, in fact. But that's good. Now the analysts on Wall Street are beginning to understand autonomy is here. The cars are running around and have been for months, millions of miles autonomously. I don't drive anymore. It's here. And the analysts see it. And there's a lot of talk as well about, Elon being fired from Doge or leaving Doge or fighting with the leadership of the country, etc. No, Elon is now focusing, and Farzad and Barrett here nailed it. So Barrett says, I wonder if this is why Elon has somewhat moved away from politics in order to accelerate GDP growth with humanoid robots. If he believes this is the only solution, then this would be his most logical choice. And Elon says, yep, target. Okay, he confirms he is moving to basically deal with the issue of finding a way for the US to accelerate GDP. Otherwise, we all become slaves to China. And nothing wrong with that, of course, if you like being a slave. But this is also the way that they can postpone the bankruptcy of the United States. Many countries around the world, like the US, Japan, etc., they're beyond the point of no return. Either they debase their currencies to zero to pay back their debt, or they grow GDP like crazy. This is the only way out. Only way out. The only way is to radically improve productivity to escape the matrix. And that's what he is now going to be focused on. So great job to anybody who owns Tesla shares. Now you've got Elon back in the saddle, focusing on the Optimus human robot. So I personally am very excited. And they're also sharing a lot of new videos. So follow Optimus on X and look at the type of stuff. You got ironing, cooking, next to be table tennis, who knows what. Anyway, future's bright. And this is kind of hilarious. Apple are reportedly going to launch their AI smart glasses by the end of 2026. I mean, didn't Apple have goggles, those things for like a fortune? I'm not sure why it takes Apple so long to do stuff. Not a critique of Apple, but yes, a critique of Apple. Why? This stuff has been around for ages. I have a pair of these, the Meta glasses. I keep them in the car. They're hilarious to use and fun to record stuff on and analyze things and find out if something at a store is healthy or not. They've been around for at least a year that I know of. So what's taking Apple so long? But it's not just Apple. Google is jumping into the fray as well. And they are going to have their XR glasses powered by Gemini AI and Google I/O. So now you've got big tech. Big tech is focusing on glasses that have been around for years. I don't know. These big tech companies, they need to really figure stuff out and start innovating a little more than just things that have been done already, is my opinion. And it's Friday. It's a holiday weekend in the US. And I'm going to finish with this profound meme du jour, which is kind of interesting. And that is, people sometimes recognize resistance in fiction. but they don't see injustice in reality. And I don't know why this is. Please, if anybody has the answer, I would love to read your comment below. Is it societal conditioning? Is it because you believe in mainstream media? Is it because of denial or apathy towards world oppression, or I don't know what? But I just think this is crazy. You watched the Hunger Games. No, I didn't, but apparently somebody did, and sided with the resistance. Star Wars sided with the resistance. The Matrix sided with the resistance. Shout out to Cal, by the way, if he's watching. You watched Divergent. Cal loves the Matrix. You watch Divergent and sided with the resistance. You watch V for Vendetta and sided with the resistance. But when it's fiction, you understand it. Yet you refuse to see it when it's in the reality you're living. Very profound. And I don't know if it really qualifies as a meme, but I'd love to find out why this is, why human nature is this way. Thank you all for coming. Hope you like the show, and I'll see you all tomorrow. Have a good Friday. Thank you as well, Sean Donnelly, American Beijinger, Batman, and Forrest, and Irrational, and Audio Eye, and Cat with a K, and Dial Up Dan, and Mr. Keyframes, and K8. Thank you. Have a good night.